Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're rebounding some today. 10-year note futures coming off the lowest levels in 5 months from the previous session to trade higher today, back in the upper middle of the 109 handle, 109.22 currently in the futures market, off the intraday highs, but still higher on the day. So a bit of a recovery here after the heavy selling pressure yesterday. And when you look at some of the driving factors, a couple things I think influencing the markets. Number one, Fed speak the last couple of days, maybe a little less hawkish, maybe even a little more dovish than what the market had been pricing in here the last week or so with the strong data points that we have received. Couple that with inflation and showing signs of stalling and possibly moving higher. But the Fed officials basically indicated here, the couple of them the last couple of days, that they still see a possibility or a probability of rate cuts later this year should the overall general trends that have the market have experienced the last 6 months or so with the declining inflation front and not the labor market strong, but not as hot as it was a few months ago. So their tone, I guess, was a little bit of a shift. I think that helped support the futures markets today. Couple that with also repositioning ahead of that all-important CPI data point tomorrow, as the markets are very sensitive to inflation data at the moment. And looking at the general trends here, we're looking at yields. The 10-year yield is down 6 basis points today to 436 basis points, so coming back below that 440 level that we did see a close above yesterday. And overall, you're seeing the yield curve moving lower from the 1 year all the way out to the 30-year, and a little bit heavier buying pressure on the back end of the curve, moving those yields even lower. So the inversion has stretched out a little bit today as the buying pressure in the middle to later treasuries is experiencing a stronger pressure to the upside here as we move towards the release of one of two big inflation data points this week, highlighted by CPI tomorrow morning.